Welcome to Power Charting for August 4th, 2023. Today, part 2 of our rotation workshop. Today, stock selection with the Wyckoff Market Report. Our special guest is Johni Scan. John, thanks for being here.
Great to be here, Professor. Enjoy it as always.
Oh my gosh, I'm looking forward to this. We're going to do some stock selection work, and it's going to be just a lot of fun and hopefully informative too. And on top of that, let me make an announcement because we have a very exciting launch coming up at Golden Gate University. We are relaunching the Technical Analysis degree program at Golden Gate University starting this fall. We are going to do a free webinar this coming Friday, August 11th at 12 p.m. Pacific time. And we, at that workshop or at that announcement, we are going to talk about the first class in the series, one class being taught in the fall, but it's going to be an entire program where you, a student, can receive a graduate degree with a master's in finance with a concentration in technical analysis. Very exciting. And we're going to have 3 great speakers, including myself, but you'll have to forgive me. Anitha Manohar, she is the professor of finance and the chair of the finance and economics department. And Brett Vium, who's going to be the adjunct professor and instructor for this FI 352 in the fall. Brett is a phenomenal educator. He is coming back to teach FI 352 again, as he has in the past. I am going to finish up with about a 30-minute presentation, or the entire program is about 30 minutes, and I'm going to just briefly talk about the phenomenal history of the technical analysis program at Golden Gate University under Dr. Hank Pruden. And so you can see the Zoom link here. If you don't have time to write that down or don't have a pen, just come to the description on the YouTube page for today's program. I will have the links. You can also link to register for the webinar. And with that, you can sign up to receive more information on the program that's going to be made available very shortly. And so with that, thank you for considering this. It's going to be a lot of fun. Let's pause for a minute and we'll get Johni Scan in here to talk about stock selection. Johni Scan is the editor of the Wyckoff Market Report. It's a phenomenal publication, and it covers a lot of ground from a strictly Wyckoffian perspective. And John has done a remarkable job of doing something that was never considered possible in the past, and that is to be able to scan on Wyckoff characteristics. And he is going to give us an overview of the Wyckoff Market Report and show us how we can detect things like rotation and then also do stock selection. And with that, John, take it away. Show us what you got here.
Well, thank you very much, Professor. Yes, we have the Wyckoff Market Report. It's a market newsletter, a report designed to help folks focus on Wyckoffian concepts in their analysis of the marketplace. So, very traditional top-down approach. We look at indices. Here we use the index equivalent ETFs because everybody can get volume on those, whereas sometimes you don't necessarily get volume depending on your charting program. Sectors have those, and both of these are arranged in what StockCharts calls the performance grid mode. Gives us the ability to see performance across the spectrum on the same time period, but also lets us compare performance over time. We can see year to date, for example, triple Q's very strong, SPY right behind that. And we have a very, very broad market comparison with the VTI total stock market index from Vanguard. Same thing in the sector area. XLC leading last week. Now, this data is from the 29th, run on the 28th. We publish on Friday, so this would be new data tomorrow. But we'll go through the format. We're going to go ahead and rerun the scan that we're interested in today for rotation purposes. We're going to take a look at things that are breaking out. If you saw part one of Professor Bruce's ideas on rotation, breakout, markup, reaccumulation, central concepts in detecting rotation, we're going to take a look at how to find those using the Wyckoff Market Report. So your thoughts, Professor? Let's move on then to our industry group work. So we go ahead, take 104 industry groups, and we rank them by performance. Very hard to see this, but automobiles are the top of the line there. And all of those are clickable. You can simply click on the report and that chart will pop up for you. So here we have automobiles, tires, recreational services. This gives us a quarterly perspective on what is performing. And we go through all of those and we see the bottom ones and all the way up to the top ones. So as we look through those particular features, we can go ahead and just click on a chart and boom, comes right up for us. We see that in the past few days, things have been giving back. This is more of a distributional format there, but look at the strength that was involved in recreational services over the past quarter or two. Really low in October last year. Testing activity, moving average cross, strength. A lot of interesting things going on there. All of this is within reach with just a click for the report. So business, training, and employment's been interesting, but fallen off significantly. So we are seeing quite a bit of give back in the marketplace this week. Some disturbing drops out there, but does not change the fundamental perspective on a lot of stocks having had immense performance first two quarters of the year. One of the other things that we do is segregate stocks by virtue of their Wyckoffian attributes. Springs are events that occur near support, move up from a test of support like this, and up, a little bit of resistance at 200 there, but we did get the spring from the 412 area right up.
By the way, that's a beautiful structure, because if you see the lift off the spring, that's exactly what you'd hope to see in a Wyckoffian structure, would be to see a spring type event, point to that low there, John, and then look at the very sharp advance, probably on earnings, and then a very shallow, narrow pause at the 200-day. This is starting to look like a late stage accumulation type structure. This is exactly what the Wyckoff Market Report can help you to find. And the goal of the report is to allow us to see more great ideas in less time, being an absolute time saver. And so this is just a great illustration of that.
Right, you can look less but see more.
There you go.
Another springy action here on the lease. We write the report so that it covers a little bit of historical period. So depending on where the stock falls in the report, it will be closer to the event that gave rise to its position in the report. So springs, further down the list, you're going to be closer to the spring. And at the top of the list, it's moved further up and away. So we sprung this area right here as a little bit of a substructure, which can build cause for a swing trade. Very nice swing trade cause here. Wouldn't you say, Professor, right in this area, sprung that? Look at leaping bars. A little bit of supply came out there on the test of the 50-period average, but jumped right up and through that and is climbing back up.
Yeah, the
Your
first thing
thoughts?
yeah, just the first thing I would do, and I apologize earlier because I was on mute. I was like talking away and I'm like on I'm on mute and I I truly apologize. But I would immediately go to a one box reversal point figure swing trading chart to evaluate that beautiful structure right there. And then you can see that yeah, very nice. And so yeah, you could change that to a one reversal right down underneath their chart scaling and below.
Yeah.
There you go. There you go. You can see, look at that beautiful swing structure. It's up and out. It's trying to hold the breakout of that level. And then the other thing I was going to point out, attribute on this chart, notice the prior swing structure, which worked so beautifully there in early 2023. You can see right there where John is circling, that is a classic swing trading structure, comes out of that area in a beautiful jump and then goes right up, and that looks very, very close to achieving the price objective as determined by that. So that's the first thing I do when I see a really good structure such as occurred here is I go right to the point and figure and try to quantify the potential of the move. So nice, really nice, John.
Right, and this O provides us with the spring because the spring, really by definition, is a penetration of support with a reversal back above support. And that's
Very,
what we look for in
very good point.
springs.
Yeah, very good
Yeah.
point.
The X's and the O's really show it.
Yeah, sometimes point and figure can really clarify your view. The vertical chart's really important, interesting, and informative. And then when you go to the point and figure, you're seeing the essence of the structure and clarifies a lot about the structure, and then it becomes countable. So both those different kinds of charts are very much a hand-in-hand relationship.
One of the interesting things that StockCharts does for its viewers and readers and members is the StockCharts technical ranking system, the scooter values. And when we're looking at springy events, remember, we're near support. You would expect that your scooter values are on the lower side, 38, 41, 28. Let's take a look at the breakouts and see what we can gather from our scooter values there. 99, 79, a couple low ones here because they can move quickly and the scooter hasn't caught up yet. But look at, generally speaking, much higher values on the scooters, a lot of 90s.
My experience with the market report too is that when you're in a generally weak market, as we were, say, back in March or back at the end of the year, you go to this list where you get breakouts, and generally all the stocks have low scooter ratings because the market overall is weak. But then what you do is you go zoom in on the ones that you see in the list that have scooter values that are near the top of that list. It's all relative. So the list might show generally lower scooters, but you're looking for the 60s and the 70s and the 80s because those are the stocks that are showing the momentum leadership in the potential for a new move in the market. So this report takes you right to those ideas.
Yeah, let's take a look at Webster. Now, keep in mind, folks at home, this data is 5 days old, so it may look different than you would expect. But here, this is a breakout. So this is the structure
Swing
that
trade.
was picked up for the swing trade. Note, conventionally, maybe an upside down head and shoulders, reverse head and shoulders, right head, left. And look at the move up and off of that right shoulder there, piercing right through the moving average, 200 moving average, 50s turning up, relative strength peaking above its moving average, and retracement, but positive on an otherwise down day. Something interesting there, wouldn't you say, Professor?
Absolutely. And also what this would immediately have me doing is going into the group level of the report and drilling into the financial stocks and looking for best ideas there. So that's another way you can go with the letter, is that you can drill into industry groups or sectors and then look for best leadership. It's a very productive way to approach the market.
And you can simply just count, visually get a rough count of how many of what sector, what industry group. We see a lot of banks here had a very difficult time early in the year with the banks, but look at how many banks are populating our breakout category. On the major large cap size, Chase, JP Morgan Chase. So you click it, you get the thing. Now look at this beautiful structure here, big LPS in May, June, leaping bars up and out, slight change momentum near resistance, but gapped right over to resistance, came back to test it, moving up in an orderly fashion. Very interesting here with rising relative strength. Your thoughts, Professor?
Yeah, and just that you can see here on the expanded report at the top that the scooter is a 90. So a very good momentum in this stock, part of the transportation space, and it has a large accumulation, reaccumulation type structure underneath, which we evaluated one of those last week when we looked at the materials sector and evaluated it, and that was a reaccumulation type event also. And what this would be very encouraging to me, John, is that here's a large structure. It jumps up in February, comes out, and then pulls back for one last pullback. This all becomes countable from a point and figure perspective, which promises or argues for a much larger move from Old Dominion. And so I would be just patiently waiting for another pause or pullback to support, which is prior resistance, for another move, because there's so much more potential in that structure than has already been achieved with this jump out.
Yeah, somehow I thought I had JP Morgan, but we got Dominion. So
oh yeah, Dominion, so much, such a great one.
Yeah, well, very nice on JP Morgan also. Let's take a look at current data.
And the thing is with the financials is that you could see, just looking at the sectors in that list, most of the stocks in that category were financials. Not all banks, but the financials are coming to life, a very good thing. And so to see that would encourage me to go look at the groups, industry groups in the financials, and then drill into the industry groups and look at the individual stocks, and also look at them, the ones that are populating the report. So, you know, right away, you're getting the best ideas.
You can go bottom up or top down, your preference, but you can focus in on the top 50 stocks we list in the report, but have the data tables available. Click away. You can start with your favorite stocks, your best setups, take a look there, and find an interesting candidate, work back up into the industry group or even the sector. So here's the current breakout list that was run today. We can search by industry, sector, even double these up.
Now I'm still looking at JP Morgan, John.
No, won't pull me back in, will it? Let's go back to the report then. Couple of interesting ones. Real estate is starting to pop up into the area of breakouts. Doc relative Doc was a medical,
No, this is
well, it's
Paycom,
Paycom.
yeah,
We're
which took a
just,
tumble.
yeah, very bad.
Well, and keep
Uh,
in mind that at the bottom of the list, there's an order to the way that they populate the list. This is, as I understand, and so the ones that are more towards the bottom uh, are closer to their breakout levels.
Exactly. So
Yes.
here we have Doc Physicians Realty, and we see it broke out over this level. We do about a quarter look back for the breakouts, and you can see that that broke out strongly and is now consolidating at or near the rising 200. So we have the 200 rising and we have the 50 rising, not yet crossed. Relatively weak on relative strength. However, look at the structure that has formed since the October lows, and we're holding up even in some negative market conditions, and look at the volume is trailing off there. So a lot of interesting things potentially in the REITs area. High yield, not cheap, but interesting yield there. Medical Properties Trust is also there, and that one has fared just a little bit better, less cause formed, but same conditions, rising 200, rising 50, cross yet to occur, pull back to a rising 200. Very interesting there. Little bit better value proposition on Medical Properties, just under a 20 PE, but look at that yield, 11.77. Your thoughts there, Professor?
Just that I like to see completed or near completed accumulation type structures. This looks to me like a work in progress rally up to the long-term 200-day moving average would be a place that in the past it has pulled back again and actually gone to new lows. So I would want to see how it pulled back here off the 200. If it can make a higher low, the less of a pullback, the more constructive it is. And then the next thing I would look for is a rally up to the January, February highs. And then that is an important form of resistance that puts it above the 200 and promises to be potentially building an accumulation. That's the way I would think about this.
Absolutely. One we can take a look at, I'll type it in, is Super Micro. This is something that we have profiled recently in the Wyckoff market discussion based on its tremendous velocity on monthly bars. This one is in the breakout category. It keeps going up, up, up. And we see that it broke out over this area here. Look at the tremendous velocity of that. It really is almost what we call a TP-like formation. Your thoughts, Professor?
Yeah, and those are a point of caution because TP formations can reverse sharply and suddenly. So it's possible that we could be in the vicinity of that. A better outcome for this chart would be to see it go into more of a range bound condition, go sideways, and then demonstrate it once to try to build a cause for another upward move. Don't know, have no concept for which will happen. But where this stock was so interesting to me was back at the end of 22 and early 23, because you can see all the way from July, you have higher highs and higher lows. And it's also the case with the relative strength. Underneath, the relative strength is also in a rising stride, rising moving average, which says that this stock is leadership. Stocks that tend to show early leadership also tend to persist in their leadership. That is exactly what this is doing. That is the lesson to take away from this chart, is that they persist, persist, persist. At this point in time, with the distance away from the 200 and the extreme sharp move that we've had, I would be somewhat cautious about the stock. I don't know that I would be a bear. I don't see any distribution forming, but it could go into some kind of a range bound condition. That is a beautiful case study there in 22 about relative outperformance and rising trend, even though on a relatively modest pace, because the whole market was going down then. And so this is a really nice bullish case study.
That's one from the report. Not necessarily viable here, but very, very interesting as a case study. I think that's all the time we have today, Professor.
Well, John, thank you so much for giving us a tour through the Wyckoff Market Report. And let's do this again soon. And where can they go to find out more?
Wyckoff Analytics. Check out our friends over at Wyckoff Analytics. Fantastic offering of coursework, free materials, on-demand course selection, as well as the market report and our Wednesday night favorite gathering spot, the Wyckoff Market Discussion.
Absolutely.
Great stuff.
Johni Scan, thank you so much for being here. It was a blast, and we'll do it again in the not too distant future. And everybody, take care. Thank you for being here. Thanks again, John. Bye for now.
Bye-bye.